This is Horizon's Middle East and Africa. Our top stories this morning. Global stocks gain over bets the Federal Reserve will soon signal it's ready to start cutting interest rates. The S&P 500 saw its longest rally so far this year. US Secretary of State Antony Blinken says Israel has accepted a Gaza ceasefire proposal and urges Hamas to do the same. We're going live to Jerusalem with the latest. Plus, President Joe Biden closes the Democratic Convention's opening night in Chicago, passing the torch to Vice President Kamala Harris and urging Americans to vote to preserve democracy. It's just gone 8 a.m. across the Emirates. I'm Lizzie Burden in Dubai, in for Jemana Basecci. Welcome to Tuesday, the 20th of August, and welcome to the programme. We've got futures pretty flat on both sides of the Atlantic as things stand. Really the highlight of the week set to be Jerome Powell's speech at Jackson Hole on Friday. So as we look ahead to that and hopefully to clues as to the path for rates ahead, though we might not get them, you've got the 10-year US Treasury yield higher a basis point at 3.8% and Brent trading weaker 0.8% at $77 a barrel as the same demand concerns that are feeding this hunger for rate cuts feed into the oil story and actually outweigh the geopolitical tensions in the Middle East. Yesterday's fall for Brent, the biggest in more than 2 weeks. But let's also check in on gold because for the first time you've got 400-ounce bars trading higher than a cool $1 million. And this is as the metal's spot price tipped past $2,500 per troy ounce on Friday. So it's an all-time high. It's still flirting with that level. And it's partly because of central bank net purchases of gold in the first half of the year, but it also comes back to the theme running through all of the asset classes this morning, the expectations of looser Fed policy. Hence, those crucial remarks from Powell on Friday really in focus for traders this week. But let's get more on the geopolitical situation right here in the Middle East. We've got US Secretary of State Antony Blinken saying that Israeli Prime Minister Benjamin Netanyahu has accepted a ceasefire deal and that it's now up to Hamas to say yes. It really puts the onus on the militant group to end the 10-month war, even as the violence continues. Blinken has called the deal a bridging moment, a bridging agreement, acknowledging not everything is spelt out in detail. And he met Netanyahu in Tel Aviv as part of his 9th trip to the region. We can get more now with Bloomberg's Dan Williams. He joins us from Jerusalem. And Dan, I wonder if you get the sense that a deal actually is close now.
Not necessarily. I think there's a big ticking clock over this stage of diplomacy led by Blinken. Last week, when the mediators met with Israel in Doha in a bid to jumpstart these truce talks, they said there would be a follow-up meeting in Cairo at the end of this week. Now, we're halfway through this week, and they have yet to announce the day when those talks in Cairo will begin. Now, Blinken is meant to set off today to Egypt to meet with the Egyptian president and then to Qatar to meet with the emir of Qatar. Presumably, those high-level meetings in the two mediator countries are meant to find some sort of way of getting Hamas sufficiently on board to retain credibility and go ahead with those Cairo talks with a hope they'll actually lead to a conclusive deal.
OK, really interesting to get the context behind the rhetoric. But we also seem to be seeing the return of suicide bombings, the first, I think, since the early 2000s. What do you read into those attacks in Tel Aviv?
Indeed, 2 days ago, there was an explosion quite late in the evening in Tel Aviv, in an industrial area of Tel Aviv. The only casualties were the bomber himself and a passerby, a delivery man, we understand. It appears that the bomber was carrying a bomb in a backpack and it went off prematurely. So presumably a large but not very sophisticated device. After about a day, the Israeli intelligence services came out with their assertion that this was indeed a suicide bombing that was botched by the suicide bomber, and Hamas and Islamic Jihad claimed responsibility for this. This is a remarkable development, operationally perhaps not. A large casualty event was spared in this case, but given that it's been pretty much a generation, almost 20 years, since suicide bombings were the tip of the spear of Palestinian violence against Israelis, this would appear to be a sign from Hamas and Islamic Jihad, at least as long as the hostilities continue, centered in Gaza and, of course, igniting other fronts, that they're looking at all options in terms of tactics to strike at Israel. Israelis will be very much on guard for this. We have an entire generation of Israelis who may not even remember the Second Intifada, when suicide bombings were almost a daily occurrence. So I imagine the security forces will be putting extra measures into preventing this. It's worth remembering that since the Gaza war broke out, there really have been Israeli clampdowns on Palestinian travel into Israel from the West Bank. So presumably just on the level of access, Palestinian suicide bombers, to the extent there are more of them in line to carry out attacks like this, will have trouble accessing Israeli cities.
OK, Bloomberg's Dan Williams in Jerusalem, we thank you for that insight. And of course, the protests over the Israel-Gaza war continue, or perhaps are being prepared for, in Chicago, where the Democratic National Convention continues. President Biden headlining the opening night of the DNC and really passing the baton to his Vice President Kamala Harris. The president outlined his administration's achievements and then went on the attack against the Republican nominee and former President Donald Trump, referencing 2021's January the 6th attack on the US Capitol and calling for an assault weapons ban.
Democracy has prevailed. Democracy has delivered. And now democracy must be preserved.
Let's get the latest now from Bloomberg's Vonnie Quinn. She joins us from Washington. Vonnie, you've got Biden there doing his best to show he's still the president, but passing over the baton to Harris, that's a difficult balance to strike, right?
A little bit. He's managing to do it quite well. But Lizzie, before we mention some of what else he's been speaking about, I do want to mention that he is still speaking right now in Chicago, where it is past 11 p.m. And he has just mentioned Gaza. So he went to the international element of his presidency. And just now, in the last 60 seconds, as you were talking to Dan, he said, we'll keep working to bring hostages home and bring peace and security to the Middle East. 2 days ago, I put forth a proposal that brought us closer to that than ever, and to a surge in humanitarian assistance into Gaza. The reason this is so serious is because Kamala Harris is going to inherit this, right, if she does succeed Joe Biden as president, and even on the campaign trail. And Joe Biden has promised to bring a ceasefire to pass before his presidency ends. You know, in the last few days, as you've been reporting, there have been talks continuing, but Hamas has not agreed, you know, officially to anything that Israel and the US have agreed to. And there are thousands of protesters on this issue in Chicago right now. So it is obviously a very hot button issue, and the president is mentioning it. But just to, you know, broaden the lens a little bit, he did have an emotional moment at the very beginning when his daughter introduced him, and this followed a cavalcade of senators basically saying thank you, Joe, kind of a, you know, passing the baton and thanking him for moving on and also for being the president for the last 4 years. It was a very emotive speech. He talked about Charlottesville and the horror there, and the white supremacy, the neo-Nazism that caused him to actually want to run. And then he went through a list of what he feels his administration has done and tied Kamala Harris to that, including, you know, bringing down Big Pharma and their ability to charge what they want for prescription drugs. He said she had cast the deciding vote on that, the tiebreaker vote. And he also said, you know, in what was quite a funny moment at the DNC, that while Donald Trump had been promising an infrastructure week for his entire term and never delivered, Joe Biden actually delivered an infrastructure decade because of that legislation, the IRA.
Well, Vonnie, just on Donald Trump, it's interesting to see him downplaying the criticism that he's undercut Fed autonomy by commenting on the Fed in our interview with him. I wonder how you think that this week he's going to try and steal the limelight while the Democrats are in Chicago.
Yeah, he's definitely been trying to at least suck some oxygen out of that centre, that DNC centre, where, you know, the celebratory feeling is just going to continue. It's really uproarious tonight, and it will continue through Thursday, in spite of protests and whatever else happens, and in spite of Donald Trump. He is making a tour of some swing states. It was Pennsylvania Monday, it's going to be Michigan Tuesday, and then he continues on. He'll end at the border on Thursday in Arizona. And he has been giving these interviews, as you say, in which he has been talking a little bit more about not just his economic policies, but his proclivities and what he might want to do, in response to what Kamala Harris has said she is going to do. So, for example, he told Reuters that he would consider doing something on housing. This was a response to Kamala Harris saying that she would give first-time homeowners tax credits worth up to $25,000, for example, and also make it easier for everybody to rent and to buy their own homes in the middle class in America. He also mentioned the Fed. We know that he's previously said he wouldn't have Jerome Powell continue to be in the job, but he backed off a little bit on that question. He basically said it's too early to say, and he also did mention that he felt it was okay to talk to people about monetary policy, but that doesn't mean that those people had to listen.
All right, Bonnie Quinn in Washington, we thank you. We'll let you get back to that speech. And let's get some analysis now from Laura Blessing, who's a senior fellow at the Government Affairs Institute at Georgetown University. Good morning, Laura. Good to have you with me. I know you've been watching the DNC with avid interest. We've had Kamala Harris overtaking the Republican nominee Donald Trump in the polls. Do you think that she can keep up the momentum, or do you think that this convention bump has already been and gone?
Oh, it's hard to tell that right now, but I should highlight both that there is significant movement in the polls from where the Biden campaign had been previously. It looks like she has rescued the Democratic Party from a very likely loss to the Trump campaign to something that's a genuine fight right now. So I wouldn't paint her as being particularly far ahead in a likely position to win. Different pollsters have looked at her as having a slightly above 50% chance of winning right now. We also know that the Electoral College does not favor Democrats. So between 52 and 54% of the national vote, you've seen Hillary Clinton get about 52%, Biden get about 54% for winning in 2020. Relative to Clinton's loss, so she has to. It's a close race, is what I gotta say there.
Do you think the real Kamala Harris is more liberal than the one she's showing now? That's what Donald Trump seems to be goading her into showing.
That's a great question. To be sure, any a successful electoral campaign will be trying to broaden the base as much as possible, in order to win election. Kamala Harris has kind of defied easy categorization on a number of different issues, including criminal justice, throughout her career. And she's also picked a VP pick, who is, I believe, a very successful pick in a lot of different ways, but also someone who's had both a moderate voting record in the House of Representatives, where he served for 12 years, as well as a far more progressive record as governor of Minnesota.
Well, is the proposal to increase the corporate tax rate from 21% to 28% something that makes economic and political sense? The amount of revenue that we've collected from corporate taxation has plummeted over time. So if one is looking for places to raise revenue, and we've had a series of tax cuts since the Reagan era without a significant course correction, a very likely place to look would be the corporate tax code. So in that sense, it would be logical economic policy. Whether or not it can be passed through the U.S. Congress is a different question entirely. What about on the monetary front? Is it problematic for presidents to be talking interest rates? I'm sorry, repeat that? Well, we had Donald Trump in a Bloomberg interview talking about the Fed. He's been criticised for it. Do you think it's problematic for presidents to be wading into monetary policy? The Federal Reserve has a tradition of independence, and so trying to their choices about the rates are their choices. In terms of inflation in general, that has been an important issue over the past couple of years. We had a high point of 9.1% inflation in June of 2022, which has since plummeted to about 3%. The last month it was 2.9, which is
tremendous progress. That said, it's still over 2.2%, which is what the Fed would like. So, depending on, where you sit, that may seem like it's still more than you would like, or it may seem like great progress. So much of politics often feels like a Rorschach test, but I'm not surprised to see Donald Trump talking about inflation.
Laura, I'm talking to you from the Middle East. I wonder how you think Kamala Harris should distinguish herself from Joe Biden when it comes to foreign policy, particularly on the war in Gaza.
Yeah, that's a really important question. We've seen Harris really unify the Democratic Party in record time. She has brought together, she's become the presumptive nominee. Biden announced on a Sunday she had wrapped up the endorsements that she needed by Monday evening, which is remarkable. There's a tremendous amount of unity in the party in a number of different ways and by different metrics. She's done great with fundraising. The kind of salient division that you've just highlighted is over Gaza. I mean, we've just seen a very high energy first day of the convention, where outside that convention hall you have a lot of Gaza protesters, but you don't see that looking at the cameras. We've also seen a platform that was the platform that was designed for Joe Biden get approved of in a ceremonial voice vote, effectively ceremonial approval with a voice vote earlier today, which notably lacked a arms embargo that Gaza protesters. So she lacks the kind of emotional baggage that Biden has on this issue, and probably has a little bit of leeway to define herself, but it's tough.
OK, well, let's see if she makes that distinction this week in Chicago. Laura Blessing, Senior Fellow at the Government Affairs Institute at Georgetown University. Always good to have you on the programme as we continue to monitor that speech from Joe Biden in Chicago. But up next, we're going to get back to the markets. We'll discuss just how far the equity rally can go ahead of Jackson Hole in Wyoming later this week. We'll be speaking to Standchart's Manpreet Gill. So do stay with us. This is Bloomberg. Just coming up to 8:20 a.m. in Dubai, let's get back to these markets. US stocks on their longest winning streak this year on these bets that the Fed is going to signal it is ready to start cutting rates in September. Investors looking ahead to the Fed's Jackson Hole symposium for more clues on the rate path. Let's bring in Manpreet Gill, CIO for Africa, Middle East and Europe at Standard Chartered Wealth Management, for more on this. Manpreet, good to have you. I know that US equities remain your preferred market. Do I take it you're convinced this summer sell-off was more of a pause in the bull market than a beginning of its end?
Well, I think that's what it looks like so far. And I had a colleague who sort of reminded me this morning that if you'd gone on vacation a month ago and just come back, you would have wondered what the fuss was all about. But to be fair, I think, there's more confidence, of course, on the earnings side. I think that's, of course, good news, which extends. But like you said, I think what sort of is coming up at Jackson Hole will be quite key to whether this rally can continue. Because, our view, of course, as now, is more sort of widespread in the market, is that, the U.S. economy can achieve a soft landing. Growth is slowing, but we think it can remain positive. And I think that's quite key to this rally sort of extending. And one big assumption of that is that the Fed, is indeed able to cut rates. They've already signaled that at the prior meeting, but I think just, how they're thinking about the longer term path for this year and next, and what signals they offer on that Jackson Hole, I think that will be quite key to sustaining this rally. So signals on the right side, but let's see.
Well, when you've got traders so hungry for rate cuts, can Powell do anything but disappoint the market in his remarks on Friday?
I wouldn't sort of worry excessively about that. If you look at sort of the market expectations of rates over the past, 12 to 18 months, we've been through the entire circle, from expecting as many as 7 to 8 rate cuts, down to expecting not even one. And equity markets have done all right. I think the key is really about confidence on the growth side, because, rate cuts are really an input into that. As long as there's enough confidence coming through that there are enough rate cuts to sustain growth through a soft landing scenario, avoiding that downside recession risk. For equity markets, we think that will be enough because that sort of shifts the focus back to earnings where the story is quite positive. It's really about avoidance of that downside risk. I think that's quite key for sustaining this equity rally. So from that ground, we're optimistic, but that's really the signal we'll be looking for from Jackson Hole.
Well, let's go from rate cuts to tax hikes. Kamala Harris proposing to raise the corporate tax rate from 21% to 28%. I wonder what you make of that from an investor standpoint.
Well, I think there's been a lot of focus, of course, on the policy, and economic agenda, from a market perspective from both candidates. Look, standalone on their own, you'd argue tax, hikes, of course, could impose a little bit of drags on the earnings cycle. But what I'd really emphasize is that, from a market's perspective, a Harris sort of presidency really would be more of the same. I think a Trump presidency, offers a few different sort of policy agendas, and I think particularly when you think from an equity sector perspective, I think you start to see some differences. But our view is always that markets tend to have a much narrower focus than the political world. And while these tax proposals are something to keep a watch on, we'd still really view the Harris presidency, or at least that candidacy, as a continuity of what we've experienced, and what we can learn from history, so many decades of U.S. presidential cycles, is that you can get a little bit of volatility around announcements like this, but actually it's quite hard to discern long-lasting impacts. I think what we're seeing from Jackson Hole in particular, what we see of deficits at a broader level and what that means for bond yields, I think that will still be much more important for markets than any one policy measure on its own.
And just finally, Manpreet, we've had the geopolitical risk bubbling along in the background, and yet oil traders seeming to look more at the demand story out of China and the US. Have we reached peak oil?
Well, I think it's more, a much narrow focus on demand and supply, because you're right. If I take a political lens, there's still a lot of challenges and concerns across the region. But as always, markets tend to take a much narrower focus. And the question for markets purely is, what's the risk of a significant disruption in either output or shipping? And, without that sort of direct link into markets, we think that the oil market's much more focused on demand and supply, where the picture is a lot softer. Because on the supply side, you do have quite a bit of supply on the table, quite a bit of spare capacity on the table. And more importantly, we think the swing factor is demand. So while you can worry about disruption to supply, you have quite a bit of spare capacity to take care of that. But on the demand side, we know that OECD demand is already on the softer side. Chinese energy demand has also been a little bit softer than expected. So we think that's, of course, keeping a lid on oil prices. And we think unless you get something completely unexpected in terms of supply disruption, we think the market's going to stay much more focused on that weak demand supply picture. So in the $75 to $90 range, most probably at the lower end of that for now.
And indeed, that's where we are, $77 a barrel. Manpreet Gill, CIO for Africa, Middle East and Europe at Standard Chartered Wealth Management. Always good to have you. We thank you. And there's plenty more coming up right here on Horizons Middle East and Africa, so do stay with us. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Global stocks gain over bets the Federal Reserve will soon signal it's ready to start cutting interest rates. The S&P 500 saw its longest rally so far this year. US Secretary of State Antony Blinken says Israel has accepted a Gaza ceasefire proposal and urges Hamas to do the same. We'll go live to Jerusalem with the latest. Plus, President Joe Biden closes the Democratic Convention's opening night in Chicago, passing the torch to Vice President Kamala Harris and urging Americans to vote to preserve democracy. It's just gone 8:30 a.m. across the Emirates. Good morning. I'm Lizzie Burden in Dubai, in for Jemana Basechi. Just checking in on these markets, and we've got futures pretty flat on both sides of the Atlantic. The S&P 500 having crossed that 5,600 level yesterday, reclaiming it as the optimism about Fed cuts continues. We have Jackson Hole later in the week. Jerome Powell's speech on Friday, really the highlight. And currently the 10-year US Treasury yield steady at 3.8%, but Brent still shy of $80 a barrel at $77 a barrel, as we see that demand story really outweighing the geopolitical tensions here in the Middle East, but also in Ukraine, as we continue to await a retaliation from Iran and a ceasefire deal in Gaza. We'll bring you more on that in just a moment, but I want to dive into the gold story as well. So if we just flip the board, you can see that for the first time, a bar of gold actually costs more than $1 million. And this is because if you have a standard bar at 400 ounce and the Troy ounce price having crossed 2,500 added up, and this is the new level. Flirting with it still, partly because of central bank net purchases of gold in the first half of the year, but also heavily because of this theme that runs through all of the asset classes this morning, the expectation of looser Fed policy. Hence, just how important those remarks from Jay Powell will be on Friday at Jackson Hole. But let's check in on those markets in Asia. Avril Hong standing by for us in Singapore. Avril, what's happening where you are?
Well, we're watching out to see what we get from Powell at Jackson Hole. Ahead of that sense that we're going to see the Fed opening the door to rate cuts is helping Asia stocks clock potentially a third session of gains, with Japanese equities erasing those declines from yesterday and helping to offset the declines you're seeing in China. Special mention for 7&I as we see a reversal from the limit up that we saw a day ago as we wait to hear details from that takeover proposal. Flip the board and take a look at what we're seeing in FX. Of course, as we wait for Jackson Hole, there was a sense already coming into today that dollar bears were getting ahead of themselves. We're seeing the dollar steadying and a bit of a reversal in the yuan as well as the yen from the climb of the past two sessions. Lizzie.
All right, Avril Hong in Singapore, we thank you. Now, I want to get back to the Middle East. As Saudi Arabia's economic transformation makes headway, diversification efforts are really focused on tourism and digital tech. And while the kingdom is pumping money into various projects to drive growth, Lee Hodgkinson, Chief Strategy Officer of the Saudi Tadawul Group, tells Bloomberg the Middle Eastern giant isn't spending indiscriminately.
We've spent a lot of time, money and effort on building out what I describe as the internationalization, institutionalization and electronification of our marketplace. If you think about those firms, an electronically generated business in Europe accounts for 60 or 65% of average daily equity markets. In Riyadh, it's about 20%. We've got a long way to go, but very, very strong signals that that's now the sort of makeup of the liquidity on the exchange is changing dramatically.
There are very few places in the world that have not just a vision, and of course, in the case of the kingdom, the Vision 2030, not just a vision, but the resources to actually back up trying to move the economy in different directions, diversifying away from oil, for example, in this case. Does it ever occur to you that money's an issue?
I think the perception of Saudi is different from the reality. I think it would be a mistake for international investors, listeners to this podcast, to be thinking that, there's an unlimited supply of money and money's just thrown around. That is absolutely not the case. In fact, I would argue that from my own experience, the way that, our major shareholder is PIF, our relationship with PIF, managed very, very carefully through, some very strong connections. When we've made acquisitions, the level of discipline, rigor and governance that we go through around valuation, around post-merger integration, KPIs is gold standard.
All right, let's get more now from Salah Shamma, who's MENA Investment Strategy Head at Franklin Templeton. He joins me in the studio, and it's good to have you. Where do you see the opportunity in the MENA region?
Well, again, right now, I think the market is fixated on, I'd say, three main factors within the MENA region. I think earnings and how they progress through the year is a main factor. You've got the geopolitical risk in the background is also another factor. And the third is the global macro risks, specifically interest rates. Now, looking at the MENA region this year, earnings have actually come in quite strong. Looking at the companies that we cover, more than 65% of the companies have outperformed consensus estimates. So it seems that MENA companies, or at least the the policy making and the investment thesis that's transpiring within the region is trickling down into the companies that we cover and is materializing in higher and stronger earnings. So we're quite bullish on the region, specifically in Saudi and the UAE, to be specific.
But of course, there's also the geopolitical narrative in the Middle East. I wonder how you factor that in, how you position around the uncertainty. We've seen Israel's assets holding up pretty well, but how are you thinking about the risk in general?
Look, it's, I mean, the short answer is the reaction has been fairly limited. It seems that MENA investors and international investors within the region are not brushing off the risk, but do believe that, you know, the risks remain contained for the time being. The market has been quite reactive, so, you know, we are seeing some sell-offs after the fact. However, the market then is pairing up the losses quite quickly, which only tells us or indicates that it's, you know, the market or investors remain or feel that things are going to be relatively contained.
But you kind of wonder whether it's because the market's desensitized to the risk or because they're waiting for something to happen for that resilience to be weakened.
Look, it's difficult to tell. It seems that, again, the market's being quite reactive. So, yeah, I would agree with you. It feels that, you know, they're being quite desensitive to the issue.
What about oil? We've seen demand outweighing the geopolitical risk story. Have we, I asked this before, reached peak oil?
I mean, that's $1 billion question. I think the short answer is, at least on the short term, we do believe that there are pressures building up in supply-demand dynamics. I mean, you just mentioned that, you know, demand is coming into question, especially with the global uncertainty. And this is coming at the point in time when OPEC intends on increasing supply. So short term, we do believe there are pressures there. However, when you look at the medium term, we're quite still bullish on oil. And again, this is driven by the fact that we've seen underinvestment in conventional oil supply. And we do believe we're going to see delays in EV adoption as well as potentially renewables coming into the fold. So over the medium term, we're still supportive of oil prices.
Let me ask you about Egypt. We've had the announcement that the central bank chief's term is going to be extended. We've had all the drama around the rate hike and the currency devaluation. Is it a good place to put your money? Is it boosting your confidence in Egyptian assets?
Well, we've seen significant inflows coming into the country on the back of this massive $35 billion investment by the UAE, as well as the extension and the augmentation of the IMF program. Our estimates indicate that more than $20 billion came into the fixed income market, which, you know, is quite supportive of the country's funding needs and shores up its balances. Now, that being said, we do believe that this large quantum of funds or portfolio flows coming into the country does make it vulnerable to any global jitters, similar to what we saw in August. So, you know, when we saw this risk-off trade coming in early August, we saw a significant amount of flows coming out of Egypt. Now, that being said, we think the central bank going forward needs to adhere to its plan of maintaining a flexible currency, you know, administering quite sound conventional monetary policy, and more importantly, sticking to the plan of privatizing some of the assets and shoring its capital.
Well, let's be more specific. What do you expect for the rate path ahead?
Look, inflation remains quite high and sticky, so we expect that the central bank needs to address that and needs to reduce inflation expectations. So, as I said, I think, you know, at least we believe that the central bank needs to continue with its conventional monetary policy that, you know, we're accustomed to in order to try and stabilize the economy.
Okay. Salah Shamma, MENA Investment Strategy Head at Franklin Templeton. Good to have you with me on the programme, taking us around the Middle East and North Africa. But now let's take a look at some of the other stories we're following this morning. Dubai-based Magellan Capital Holdings is set to launch a $700 million multi-strategy next month that'll rank among the largest debuts in the UAE. The fund will run equity and credit strategies, and the size of the fund really is notable, given only 5% of 2024 hedge fund launches globally have exceeded $500 million this year. In other news, Apple will make its most expensive new iPhone Pro and Pro Max models in India for the first time this year, a milestone for the US company and the Asian country's manufacturing sector as well. Sources say key partner Foxconn will begin assembling the new devices within weeks of their global launch later this year, with thousands of workers already being trained at its southern India factory. Apple is shifting output to India as it looks to diversify beyond China. Those are some of our top stories, but coming up on the programme, the volatile Nigerian naira has hit wireless carrier MTN's earnings. But the CEO says the appetite for the group's fintech business remains strong. We'll bring you more on that conversation next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in Dubai. Now, Africa's biggest wireless carrier by revenue, MTN, has posted its first loss since 2016 after the devaluation of the Nigerian currency crimped income from one of its key markets. However, the CEO, Ralph Mapita, says the group's fintech business is seeing strong growth across the continent and in Iran, despite the political tensions.
South Africa can step up a bit more in the near term in terms of its own top-line growth and its earnings contribution. The rest of the portfolio, Ghana has been growing actually very, very strongly. Ghana, continues to grow, both the data and fintech businesses, well all above, 40% on those bearers. So there's a portfolio effect of the other markets that can also grow. And the fintech business in the period grew very strongly. 27% service revenue growth, the EBITDA margin growth, the EBITDA margin delivered by that business has also been very, very strong. So when you look at the portfolio, I think you'll see different parts of the portfolio, contributing to the overall group results. And as I said, in Nigeria, there's still pent-up demand and growth that we see for both the core connectivity business and our fintech business.
Ralph, just sticking on the other parts of the portfolio, also in Iran, on the earnings report, you noted the uncertainty around what is happening in Iran, especially with sanctions from other countries. I mean, are there plans to adjust or speak with authorities there? How is that affecting the rest of the group?
We've continued to manage Iran in the same way over the last 5 years. Since the US sanctions came in, we haven't been able to get, any of the dividends in that market out. Obviously, the SWIFT financial system is not open to Iran, flows. So, the accumulated dividends that we are on lending the company in Iran is about 3 billion. So we don't anticipate to see any upstreaming, coming out of Iran. But what we reported was that the earnings grew there by, over 80%. And that's, a very healthy clip for earnings growth in Iran.
Are there markets, Ralph, that you're potentially considering exiting? MTN is considering exiting. I mean, we talked about Iran, potentially the challenges that are there. But there's also been some challenges with Sudan as well. And that's another geopolitical story that's having an effect on the company. Are you thinking about potentially exiting either of those markets?
So the markets we've announced we've done the exit on, it is Afghanistan. So we've completed the exit of Afghanistan in February. And now we've done Guinea-Bissau. So Guinea-Bissau is done. So what we're working with, we have an offer from Telecel to acquire Guinea-Conakry. So those are the markets where we have exit plans in execution. Sudan is challenging, for sure. The ongoing conflict makes it very difficult for us to be able to provide consistent connectivity. Some sites do come down as a consequence of the conflict there.
Well, let's go to Bloomberg's chief Africa correspondent now, who brought us that interview, Jennifer Zabasaja. Morning, Jen. The CEO sounding pretty hopeful there on South Africa.
Right. Lizzie, I think it's important, especially when you consider that South Africa has been the home base for MTN. But if we just take a look at some of the numbers, it really appears to be the bright spot in terms of what MTN's earnings were for the first half of the year. So they grew their subscriber base by 4.7%, reaching 38.5 million at the end of June. They also this also helped contribute to service revenue growth, which jumped by 59.1%. Now, this is a good story for South Africa, especially if you consider some of the headwinds or some of the issues that the company had been dealing with prior to 2024. And of course, you factor in the election and a lot of the issues that were circling around the country at this point in time. So yes, it is a bright spot for the company, South Africa. But as Ralph was just mentioning there, there's been a lot of macro issues that the company's been dealing with. Of course, there's the naira devaluation. Nigeria has accounted in the past for almost a third 1/3 of MTN's earnings. So this is significant. But as he was saying there, he does believe that the worst of it is behind them. But these geopolitical issues in Sudan really contributing as well to some of the headwinds that the company is facing. But he still seems quite optimistic about the future, namely because that's been underpinned by growth in some of their markets, of course, here in South Africa. But then also because of that fintech business, he sees a lot more growth. Their fiber optic business, he thinks it's going to continue to take the company further. And so, it's hard to really predict what other potential headwinds are to come and that the company will be faced with. But he still sees connectivity and what the company is doing in the markets where they're strongest as continuing to be their growth driver in the near term.
So fintech a bright spot, but interesting to hear him telling you that MTN's actually looking to exit more markets. Tell us more.
Yeah. Right. I think most of that just goes to the issues that they've had in some of the markets. Ralph was there speaking about Iran. He did clarify that they're not planning on exiting in Iran, but they've had some issues getting their money out of the country. And so strategically, they are just trying to look to double down on the countries, where they are seeing the most success, where they are able to work with authorities to expand their customer base. And so at the moment, the countries that he listed are the only ones in the pipeline. But it will be really interesting to pay close attention to Sudan because, of course, the humanitarian situation that is happening there. It'll be interesting to see what the company does and how they continue to navigate that if we do not see conditions improve.
All right, Bloomberg Chief Africa Correspondent Jennifer Sabasajo, we thank you for bringing us that interview with the MTN CEO. Let's go now to some of the other top stories out of Africa this morning. Nigeria owes its state oil company nearly $5 billion in fuel debt. Last year, the government reintroduced the costly gasoline subsidy to help Nigerians with rising inflation. The National Petroleum Corporation says it's planning to invest $6.6 billion in operations this year. Turning next to southern Africa, Botswana is reallocating $97 million to deal with its worst drought in decades. The country is battling El Nino weather conditions, which are wiping out crops and killing livestock. The government's rescue package will help farmers pay seasonal loans and buy animal feed. Coming up, we're going to Libya, where the central bank resumes operations and defies a decision to replace its governor and board. We'll bring you all the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in Dubai. To North Africa now. Libya's central bank has resumed operations, defying a decision to replace its governor and board in a move that could further harm the already fragile 2020 ceasefire deal between rival governments. This is after the legislature in the east of the country last week said that it was pulling out of a 2020 ceasefire deal. And adding to the tension was the closure of the country's largest oil field. Well, we can get more now from Stuart Livingston-Wallace, Bloomberg's executive editor for MENA and Russia. And Stuart, you've seen Libya in turmoil for more than a decade. What prospects are there of returning any sort of stability?
Slim, very slim. And the problem with Libya is because that chaos has been going on for so long, and because there are so many factions involved and militias and rival governments, it really is chaotic. Plus, on top of that, you have lots of outside powers also intervening on either side. So because it's been going on for so long, it's very hard to sort of pick out what are the important moments in all of that noise. But it does feel like we're coming to certainly a new chapter, and quite how it develops will remains to be seen. But again, you've got so many actors at play here. It's very hard to see what the outcome is, or a positive outcome anyway.
Yeah, it really feels like a whirlwind of events. I wonder if you have a sense of where it's all heading, whether it could lead to fresh violence, what the implications are for the immediate neighbours and for Europe as well.
Yeah, I mean, certainly in terms of the violence, that is always a threat, and it's definitely decreased somewhat in the last 4 years. But it is one of the most weaponized countries on the planet. You know, there's a lot of weapons hanging around. And in terms of the impact on the region, you know, that is certainly the number one problem in the immediate neighborhood. It is a source of weaponry. because it's basically huge areas of lawlessness across the country, and so there's a lot of arms flowing to the neighbours and stoking those conflicts. In terms of Europe, there are two things to worry about. Number one, it is the number one gateway for migration from sub-Saharan Africa up into Europe, and that's led to all sorts of horrific situations. So, for instance, in the last decade, we've had something like 30,000 people drowned or disappeared on that migratory route across the Mediterranean. That's a horrific situation and very hard to tackle and deal with when, fundamentally one side of that equation is in total chaos on an almost permanent basis.
OK, Stuart Livingston-Wallace bringing us the latest on that pretty bleak situation around Libya. We thank you as we continue to monitor the situation there. Quite striking, actually, that the internationally recognised Presidential Council in Tripoli to replace the bank's central bank chief and its board was simply defied, but it continued to keep across it. Let's check in on these markets as we head towards the end of the programme. We've still got futures pointing ever so slightly higher on both sides of the Atlantic as we head towards the cash trade on Wall Street. S&P evening just flat to the upside. Euro Stoxx 50 futures higher 0.1%. Treasury yields pretty steady. Of course, the highlight of the week is going to be Jackson Hole. We'll hear from Jerome Powell on Friday. We'll also hear from the Bank of England Governor Andrew Bailey and the European Central Bank's chief economist Philip Lane. And in the background of that, we continue to keep an eye on the geopolitics. We have the situation here in the Middle East as well as in Ukraine, and we're going to discuss all of it next on Daybreak Europe. We'll bring you not all just that, but the latest commentary out of the ECB and a preview of the Riksbank decision. So stay with me for the Daybreak Europe programme next. This is Bloomberg.